Hello, I am Sangvi Hitansh. I will be presenting to you my research proposal for winter internship project. So my research title is Comparative Study of Hedge Funds over different asset classes from the year 2014 to 2024. So let's start by defining the key concepts. Hedge funds. These are the private investment funds that uses diversified strategies including leverage and derivatives. Usually these are catered by accredited investors, that is highly qualified individuals. As for asset class, we will focus on equity, fixed income sources like bonds and corporate debt, and commodities. Now, what's the objective of my research? So, my primary objective is to explore how hedge funds perform over various asset classes. Specifically, I aim to answer four key questions. First, how have the historical performance of hedge funds varied across different asset classes? Second, can hedge funds offer diversification benefits compared to traditional investments like stocks and bonds? Third, how regulatory changes impacted hedge funds' performance and risk taking? And finally, do hedge funds really generate excess returns even after accounting and risk sectors? So, to achieve all these objectives, I will be relying on secondary data collected by various trusted sources like Eurocoinage, Bloomberg, HFR, Wikipedia. And also, we can take data from official websites of different hedge fund managers. The tools I will apply include financial metrics such as Sharpe ratio. This will allow us to compare hedge fund performance across various asset classes on risk adjusted basis. Sortino ratio. This tool helps us in analyzing whether the hedge funds provide diversification benefits during market stress. And Trano ratio. This focuses on how efficiently hedge funds generate returns from from the level of exposure the overall market has. As for statistical techniques, we have descriptive analysis, which summarizes data through average, standard deviation, and other statistical measures and provide the overview to hedge fund performance. Then we have hypothesis testing. This is crucial from my research as it helps to determine whether observed difference in hedge fund performance is statistically significant or it merely just by chance. Then we have correlation analysis. This will help to evaluate relationship between hedge funds and traditional investors. A low or negative correlation signifies diversification benefit, which is a research objective of my topic. Then we have regression analysis. This will help us to quantify the impact of various factors such as regulatory changes and market conditions. And lastly, we have time series analysis. It helps to identify trends and patterns over time by studying performance, fluctuation, and volatility. Now let's quickly take a look on the research paper that I reviewed. So the first is Diverse Hedge Funds, published in the year 2021 by the Review of Financial Studies. This paper investigates the impact of team diversity on hedge fund performance. It finds that hedge funds with more diverse teams tend to outperform those with less diverse teams, suggesting that diversity is a valuable asset for performance of hedge funds. So the next is performance persistent under different business cycle and stock market regimes, which is published by ResearchGate publication in the year 2024. In this research paper, US funds are examined across various business cycles and stock market regimes. It finds that performance persistence is stronger during period of economic growth and bull market, particularly the top performing funds. However, persistence weakens significantly during recession and bear markets. So the next we have fund of funds versus simple portfolio of hedge funds, a comparative study of persistence and performance published by Journal of Derivative and Hedge Funds in the year 2007. This paper compares the performance of funds with simple portfolio of hedge funds. It finds that simple portfolio of hedge funds can outperform funds of funds, particularly when constructed using non-directional strategies with high information ratios and Sharpe ratios. Lastly, we have hedge fund performance during and after the crisis, a comparative analysis of strategies from the year 2007 to 2017, published by NDPI in the year 2019. This paper analyzes the performance of 10 major hedge fund strategies during and after the 2008 financial crisis. It finds that several strategies, including global macro, multi strategy, emerging markets, long shock equity, event driven, convertible arbitrage, and fixed income arbitrage, outperformed the S&P 500 over the entire period. The study also examines the performance of these strategies under different market conditions and risk frameworks. This concludes my research proposal. Thank you for your attention.